So imagine having just like a perfect winning streak.
Yeah.
You're making mathematically flawless decisions,
Really
right?
doing everything by the book.
Exactly. And then, in the span of maybe 48 hours, the fundamental laws of physics just change entirely. And it wipes out almost everything you've built.
It sounds like a nightmare, honestly.
Oh, totally. But that is exactly what happened to a top-tier trading algorithm between June 1st and June 5th, 2026. Welcome to the deep dive.
It's a great one today.
It really is. Today, our mission is to unpack this truly fascinating research data log from Team AI Lab. We are basically tracing the dramatic 5-day trajectory of two distinct algorithmic logic strategies. And they are doing battle with an incredibly hostile market environment.
Yeah, but before we introduce those two contenders, we really need to establish the ground rules for how we're actually looking at this data.
Oh, yeah, for sure. The disclaimer.
Right, the strict disclaimer. Because what we are doing today is purely a retrospective behavioral analysis of proprietary algorithms.
Yeah.
This deep dive is, entirely non-advisory and strictly nonprofit. We are simply sharing a research data log to explore how algorithms adapt, or, well, how they fail to adapt, under immense pressure.
Exactly. Just looking at the logs.
Exactly. There are absolutely no trading recommendations here. And as always, past performance guarantees absolutely nothing about the future.
That context is so vital because what we're looking at is essentially, I don't know, like an intellectual autopsy of a really wild week.
Yeah, that's a good way to put it.
So let's meet the algorithms operating in this log. On one side, we have Team Mountain Climbers.
The steady ones.
Right. Their core logic is equilibrium detection. Mechanically, they are constantly searching for stability. They scan the market for assets where selling pressure has mathematically exhausted itself. So they're looking for a solid floor.
Yeah, they want something that stopped falling.
Exactly.
That-
And then on the other side, we have Team Wave Riders. Their logic is completely different. It's surging force tracking,
Pure momentum.
pure momentum. They're looking for that acceleration, buying into volume and price action to just, ride explosive waves.
And honestly, it is the perfect laboratory for observing how distinct strategies handle a changing ecosystem.
Oh, absolutely.
But to really understand the severity of the shift that occurred midweek, we have to establish the baseline first, right? We need to look at Monday.
Right. June 1st.
Yeah, June 1st,
Yeah.
a day that presented the illusion of absolute peacetime in the market.
It really did. The numbers for the Wave Riders on that Monday are genuinely striking.
It came in hot.
Seriously hot.
Nico.
They come into the week carrying over a massive balance of plus 56.6 season points.
Which is huge.
It's massive. And on Monday alone, they score a daily plus 38.5 points. Like, out of their 11 active unit rosters, 9 are holding positive points.
Just dominating.
Dominating. Team Mountain Climbers, by comparison, is much quieter. They're sitting at a total season score of just plus 9.3 points, adding a modest daily plus 2.9.
They do manage a win, though.
Yeah, they do manage to successfully complete a 10-session exit in the machinery sector for plus 6.4 points. But, next to the Wave Riders, they seem incredibly sluggish.
The contrast is totally stark, and it requires us to understand what is actually happening under the hood.
Right.
On Monday, capital was just flowing freely. It was chasing momentum. When the Wave Riders detect a surge, they buy in. And because the broader market environment is, cooperative, that surge continues, they capture the delta.
Okay, let's unpack this. I think an analogy helps clarify the mechanics here.
Go for it.
It's like the Wave Riders are driving a speedboat across a calm lake, right? They're constantly checking their speedometer to ensure they're accelerating. As long as there's open water, they win.
Probably like that.
And the mountain climbers, meanwhile, are slowly dropping a weighted line to the bottom of the lake, just checking if the ground underneath them has stopped shifting.
Yeah, very methodical.
Very methodical. But, okay, here's my pushback for you.
Huh.
If you are the developers at Team AI Lab and you see the Wave Riders pulling in almost 40 points in a single day, why do you even bother keeping the mountain climbers active?
It's a fair question.
Why not just put all your processing power behind the momentum logic that is clearly dominating the season?
Well, what's fascinating here is that it's a very common human instinct to want to double down on what is currently working, right?
Of course, you ride the hot hand.
Exactly. But algorithms, at least the way Team AI Lab designs them, they do not predict. They adapt.
Okay.
If you turn off the mountain climbers because the Wave Riders are currently winning, you're making a hard prediction. You're predicting that the lake will never experience a storm. Yeah.
You're assuming the environment is static.
Exactly. You're assuming peacetime lasts forever.
And a market environment is never static.
Never. And the data from Tuesday, June 2nd, perfectly illustrates why you never turn off your alternative sensors.
So what happened on Tuesday?
Well, on paper, Tuesday still looked like a decent day for momentum. The Wave Riders successfully completed a tenure in the electric appliances sector, and they exited with plus 15.0 points.
Okay, that sounds pretty good.
Right. But if we look at their overall daily score, it actually dropped by minus 7.2 points.
Wait, I want to make sure I understand the mechanics of that drop. If they had a successful exit for 15 points, how do they end up negative for the day?
Because the surging force logic was starting to misfire on its new acquisition.
Oh, I see.
Mechanically, what happens is the algorithm detects a surge in volume and price, so it buys in. But unlike Monday, there was no follow-through liquidity.
So the surge was a fake out.
Exactly, it was a head fake. The price immediately retreated, trapping the algorithm at a higher entry point. This forces it to absorb unrealized losses across its active roster.
Wow.
Yeah, so that minus 7.2 points was a subtle tremor. Beneath the surface, the environment was already beginning to shift, just subtly pushing back against the momentum logic.
Which perfectly sets the stage for Wednesday, June 3rd. We go from a subtle tremor on Tuesday to basically a full-blown earthquake on Wednesday.
Yeah, Wednesday was historic.
I'm looking at Wednesday's data, and I'm honestly trying to make sense of the math here. Because the mountain climbers, the algorithm dropping the weighted line, the slow one, suddenly scouted massive 5 new units in a single day.
Which is very rare.
Right, and their daily score jumps by plus 46.0 points. It pushes their season total to an incredible plus 52.3. How does an algorithm designed to be slow and steady suddenly move that violently?
I know, it seems completely contradictory. But it makes perfect sense when you understand the velocity of capital flight.
Okay, break that down for me.
So equilibrium detection doesn't mean the algorithm itself is slow, right? It means it looks for assets that have stopped falling.
Right, it wants a floor.
When 5 new units trigger that specific criteria in a single 24-hour period, it means a massive amount of institutional capital suddenly rushed to establish a floor across multiple disparate sectors.
Wow, so everyone was bailing out at once.
Exactly. The risk appetite in the market just completely evaporated overnight. Everyone wanted safety.
And while the mountain climbers are soaring, the wave riders completely stall out. They managed to eke out just plus 5.9 daily points, leaning heavily on a single successful exit in non-ferrous metals for 4 points.
Yeah, their speedboat hit a wall. And to truly grasp the scale of this structural pivot, we really have to look at how these algorithms performed relative to the broader market reality.
Oh, you mean the index contrasts?
Yes. So for those listening who might not be familiar, indices like the 2PX and the Nikkei 225 represent the baseline performance of the biggest companies in Japan.
The heavy hitters.
Right. So on Wednesday, Team Mountain Climbers didn't just have a good day, they actively beat the 2PX by plus 2.2 points and the Nikkei 225 by plus 0.4 points.
That's incredible. They were generating true alpha.
Exactly.
In other words, while the top tier of the Japanese market was actively struggling to find its footing, this equilibrium algorithm was extracting outsized profit from the chaos.
I mean, I would frame it slightly differently. It wasn't just extracting profit. It was proving that stability had become the most valuable currency in the market. The broader market was actively punishing momentum, which is why the Wave Riders actually fell behind the Nikkei 225 by minus 1.4 points that same day.
Oh, wow.
Yeah, while at the same time, it was highly rewarding the search for a solid foundation.
You know, it's just fascinating. When an algorithm designed to detect equilibrium beats the major indices by those margins, it really highlights a violent historical turning point for the season.
It's a huge red flag for the environment.
Exactly. It means the market fundamentally repriced risk, moving from peacetime to crisis mode in literally a matter of hours. And the algorithms caught this structural shift in real time, completely blind to whatever news headlines or, human panic was driving it.
They don't care about the news. They only see the structural flow of capital. On Monday, capital was aggressively chasing surges. By Wednesday, capital was desperately seeking a floor.
So the mountain climbers found their floor on Wednesday. They capitalized on that massive flight to safety. But here's the thing about floors in a highly volatile market.
They can break.
Exactly. Sometimes the entire foundation shifts underneath them. Finding a floor doesn't mean the building isn't still collapsing.
No, it doesn't.
And if we look at the data from Thursday and Friday, We see exactly what happens when the structural integrity of the entire market just gives way.
Yeah, we enter the phase of severe attrition.
It's rough. Thursday, June 4th, introduces severe friction. The Wave Riders suffer a daily minus 16.7 point drop.
A huge hit.
And then comes Friday, June 5th. I mean, it is just a pure data bloodbath.
It really is.
Team Mountain Climbers takes a minus 22.7 point daily hit, and Team Wave Riders takes a minus 24.6 point hit.
Unbelievable.
By the time Friday closes, the Wave Riders' season points have fallen entirely into the negative. They're sitting at minus 1.3 points.
They wiped out everything from Monday.
Everything. And the Mountain Climbers, who were sitting at this euphoric plus 52 just 48 hours earlier, they're clinging to life with a mere plus 4.0 season points.
And if you look at the active positive rosters, they plummet right alongside the scores.
Oh, right.
The Mountain Climbers dropped to only 3 out of 10 units holding positive points, and the Wave Riders dropped to 5 out of 15. It is just a devastating wipeout across the board.
Okay, let's unpack the how of this Friday crash.
Yeah.
Because, I mean, I understand why the Wave Riders lost points. Momentum algorithms get crushed when there is no momentum, right? They keep buying false surges.
Right, they keep trying to accelerate into a wall.
But why did the Mountain Climbers, the equilibrium detectors, lose almost 23 points? Shouldn't they be protected if they already found a floor?
That is such a crucial distinction to make. See, equilibrium is relative to the current environment.
Sure.
So if an asset falls from $100 to $80 and stabilizes there, the algorithm reads that as equilibrium. It found the floor.
Makes sense.
But if a massive macroeconomic shock hits the market on Friday, that $80 floor can suddenly just give way entirely and drop to $60.
Oh, wow.
Right. The algorithm didn't miscalculate the floor on Wednesday, it's just that the gravitational pull of the entire market increased on Friday, dragging literally everything down with it.
Okay, that makes a lot of sense. The gravity just got stronger.
Exactly.
But amidst that widespread wreckage, the data log points to something really compelling. What we can call the survivors of the week.
Yes, the anomalies.
Right. There were units that actually made it through the Friday bloodbath
Mhm.
and exited with positive scores. How is that possible?
Well, this is where we really see the mechanics of algorithmic adaptation at play. Remember, these systems operate on a strict 10-session tracking protocol.
Right, the 10-session clock.
When they scout a unit, their mandate is to track it for exactly 10 sessions and then exit.
And the survivors basically managed to complete that 10-session clock on Friday, right in the middle of the crash.
Yes, they cross the finish line.
For Team Mountain Climbers, the surviving sectors were precision instruments, glass and ceramics products, chemicals, and machinery. And that brought in a total of plus 9.6 points.
A solid save.
Yeah. And for Team Wave Riders, the lone survivor was retail trade, closing out for plus 4.3 points.
Now, if you look closely at those survivors, it raises a really important question about how we actually define success in algorithmic systems.
Right, because you might be listening to this and wondering, if a massive daily score drops by 20 plus points on Friday, didn't the algorithms just fundamentally fail?
It looks like failure to us.
Right. How can a few surviving sectors be considered a success in an environment that toxic?
Because failure in this context is a distinctly human emotional concept.
Oh, that's interesting.
From a pure data perspective, what we are observing here is the literal definition of temporary adaptation. Those surviving sectors like, precision instruments or retail trade, they were not magically immune to the Friday crash.
Right, they didn't have a force field around them.
Exactly. They experienced the exact same gravitational pull as everything else.
But they survived the clock.
Precisely. They survived because their specific logic managed to navigate the friction just long enough to complete their 10-session mandate.
Okay, I see.
Perhaps the equilibrium established in the chemical sector was just deep enough to buffer that Friday drop? Or maybe the retail trade sector had just enough residual surging force to sort of coast across the finish line before the momentum fully died?
Wow.
It is a profound study in algorithmic resilience, because the goal of the algorithm isn't to achieve infinite growth every single day. The goal is to execute the logic under severe duress and extract whatever positive value exists before that operational window closes.
That completely reframes how I look at a day like Friday. It really isn't about being perfectly shielded from the market. It's about having enough structural integrity to outlast the timer.
Exactly. You just have to beat the clock.
Which really forces us to zoom out and look at the broader implications for the season. I mean, the velocity of the change we just tracked, is breathtaking. It really is.
We started this week with Team Wave Riders sitting on a very comfortable plus 38.5 season score, completely in sync with the environment. And they ended the week essentially erased at minus 1.3.
And the mountain climbers spiked to plus 52.3, actively outperforming the major indices, only to then collapse back down to plus 4.0.
Whiplash.
Total whiplash.
Yeah.
From an outsider's perspective, observing that level of volatility, it just looks like an unwinnable game.
You know, a listener might be thinking right now, if the developers at Team AI Labs saw this massive structural shift happening on Wednesday and Thursday, why on earth didn't they just pull the plug?
Yeah, why not step in?
Exactly. Why not freeze the system on Thursday before the Friday crash wiped out all those hard-earned gains?
I'm so glad you brought that up, actually, because intervening to save the points would completely violate Team AI Lab's research philosophy.
Because intervening ruins the data set.
It completely destroys the integrity of the behavioral analysis. To the researchers at the lab, a brutal week like this is not a defeat. It's a crucial data harvest.
Data harvest? An algorithm doesn't feel despair when its score drops by 24 points on a Friday, right?
Doesn't need a hug.
Right. It doesn't spend the weekend panicking about its portfolio. It simply categorizes that massive friction as behavioral data.
It lawns the environmental toxicity as a stepping stone.
Yes. The Friday crash provides the exact mathematical parameters of how momentum fails and how equilibrium breaks.
Which is incredibly valuable.
Exactly. That data is fed right back into the system. The logic is refined, the environmental sensors are recalibrated, and the scouting process begins again, entirely devoid of emotion, on Monday at 9:00 a.m.
It really highlights the relentless, emotionless accumulation of knowledge, which honestly makes this a perfect moment to reiterate our ultimate disclaimer.
Let's hear it.
We explore this data log purely as an intellectual curiosity. We want to respect your desire to peer behind the curtain of complex systems and really understand the mechanics of how they operate. But the stark reality of this 5-day arc proves that these markets are highly volatile, deeply dangerous environments. A 24-point drop for an algorithm is a fascinating data harvest. But for a human being, it's real capital and real stress.
Very real stress.
Therefore, the final judgment on any real-world investment must solely, unconditionally, be your own responsibility. We're just here to read the logs and map the terrain.
Yeah, it's about observing the environment. It is not about attempting to blindly copy a machine that is playing a completely different game than a human investor.
Well said. Thank you for walking through this complex journey with me today. We've traced a truly wild week. I mean, from the dominant, frictionless momentum surges of the Wave Riders on Monday.
To the historic shift.
Right, through that violent historical pivot on Wednesday where the mountain climbers capitalized on a flight to safety, straight into the severe attrition and temporary adaptation of Friday.
It is a remarkable microcosm of market dynamics. And I think it leaves us with an incredibly important insight about resilience in dynamic systems.
Oh, I'd love to hear it.
Well, when you look at the whole picture, the real takeaway isn't just that markets are volatile or that human psychology makes trading difficult.
Okay, what is it?
The true insight here is about the architecture of survival. Think about it. If an environment can flip from rewarding pure momentum to demanding absolute stability in just 48 hours, then any system that relies entirely on a single logic is doomed to eventually face a toxic environment.
Wow.
True resilience doesn't come from finding one perfect strategy that works forever. It comes from having multiple opposing logics like equilibrium and surging force running simultaneously. Because eventually the laws of physics will change, and survival depends on having a sensor already deployed in the new reality.
Wow. Survival isn't about infinite growth. It's about having opposing logics ready for when the environment inevitably turns hostile. That is a brilliant way to conceptualize it.
It's all about adaptability.
Definitely something to think about the next time you are trying to navigate a complex, shifting landscape in your own life. We will leave it there for today. We look forward to having you with us for the next deep dive. Stay curious out there.